Yes, dear student, so we have seen just a few minutes ago the format of a balance sheet, what are the items to be recorded in the balance sheet, and the format of a trading and profit and loss account, and what are the items to be recorded in the trading and profit and loss account. I hope you got the idea how to prepare trading and profit and loss account. That means the financial statement without any adjustment. So here the financial statements are divided as a two parts, the part 1 and part 2. In the part 1, so we have to learn only how to prepare the trading and profit and loss account with the simple adjustments or with no adjustment except the closing stock, and only the items where to record, and so what are the items adjustments to be made for a capital and other things. So as a part of that, now all of you go to the page number 366 of Accountancy textbook part 2, and the practical question or the question for a practice given by the end of the chapter. The practice question number is 6 and page number 366. All of you open, and so I will dictate the problem. So just you go through the problem and afterwards I will solve the problem. Here it is given that prepare a trading and profit and loss account and a balance sheet as on March 31st 2011. Here the trial balance is given. So I will go through the trial balance items. In the debit side of the trial balance, so machinery 27,000 rupees, debtors 21,600, drawings 2,700, purchases 58,500, wages 15,000, sundry expenses 600, rent and taxes 1,350, carriage inwards 450, bank 4,500, opening stock 6,000. And in the credit side, so capital rupees 60,000, bills payable 2,800, sundry creditors 1,400, sales 73,500. So this is the trial balance which is given in the problem. So I have already informed you that the final account or the financial statement will be prepared with the help of the trial balance, and ultimately one adjustment is given, that is a closing stock as on March 31st 2011 rupees 22,400. Okay, now let us start solving the problem. So first we have to prepare the trading and profit and loss account, the trading and profit and loss account of the particular trader as on 31st March 2011. So this should be the heading. So we have to write a first, and we have to open the format. So format, there is a horizontal format, left side that is the debit side and credit side. On the top of the account, so in the left side we have to write a DR, on the top of right side we have to write a CR. The first column is particulars, second column is meant for amount, third column is yet again particulars, the fourth column is meant for amount. So now as I have already read the problem and the problem is with you in the textbook, so now go through that. The very first item of the trading account is opening stock. So opening stock rupees 6,000 should be recorded in the debit side first. If there is no opening stock, we have to begin with the purchases, but in this problem opening stock is given. Okay, next purchases. How much is the purchases? The purchase amount is 58,500 given in the problem. So now you have to record purchases 58,500. Next, the direct expenses. The direct expenses are available in the problem. The very first direct expenses which is given in the trial balance in the debit side is wages, rupees 15,000 you have to record. Next, carriage inward. So carriage means it is a transportation expenditure or the expenses incurred for carrying the goods to business is called as a carriage. So inwards means for bringing the goods. So carriage inward is also direct expenses. Therefore we should record in the debit side of a trading account carriage inwards rupees 450. Now so you come to the credit side of a trading account. What to record in the credit side of a trading account is, so first we have to record sales. So in this problem there are no returns, therefore there is no need of a subtraction of returns either from the purchase or from the sales. Directly the amount which is given in the trial balance, you write sales rupees 73,500 is, are you getting me? Yes, okay, 73,500 you write in the credit side. Next, all the items which are given in the trial balance, which are a part of a trading account, we have recorded. But below the trial balance, one adjustment is given. So one item is given, that is closing stock. So closing stock should be recorded. Closing stock should be recorded. So in the credit side of a trading account, so after the sales, so closing stock worth rupees 22,400. So now what we have to do is we have to balance the account. So already you people have learnt in case of a ledger and in case of a ledger and in case of a preparation of other subsidiary book, how to open the ledger accounts and how to balance the ledger account. So like that we have to balance. First we have to make the total of highest side. The credit side is the highest, 95,900. The same amount should be recorded in the debit side also parallelly. So parallelly means equal to each other. So here 95,900 I have recorded in the same direction. Here also you have to record 95,900, and now we have to make a balance. So make the balance, the difference is called as a balance, and the difference is so 15,950, it is a gross profit carried down. So gross profit carried down. So as this problem shows us that revenue is higher than expenses, the resultant figure is gross profit, that is 15,950. Have you completed? Yes. So now we shall proceed to the second part of trading and profit and loss account. So gross profit carried down should be, make it as a brought down to the profit and loss account. Gross profit brought down, the same amount 15,950, you write it in the credit side of a profit and loss account, 15,950. So now you go through the trial balance. In the trial balance you have to find out indirect incomes and indirect expenses. So as I have observed in this problem, there are no indirect incomes. So therefore now you go to the debit side of trial balance and you find it over there which are all the indirect expenses available. The first indirect expenses is sundry expenses. Yes, have you got? Yes. So sundry expenses rupees 600 you have to write. Next, rent and taxes. Rent and taxes is also indirect expenses. You record in the debit side of profit and loss account, rupees 1,350. 1,350. So now we have recorded the sundry expenses, rent and taxes. So you go through the trial balance. Are there any other indirect expenses? No, there are no other indirect expenses. Okay, then, so we shall balance the profit and loss account also. So now you make the total of profit and loss account. The highest side is the credit side, 15,950, right? 15,950 both the side, and you make the difference of the debit side and credit side. The resultant figure is 14,000. This 14,000 is a net profit. So net profit of the business for a year 2010 and 11. So this net profit should be transferred to capital account. This net profit should be transferred to capital account. So and this will appear in the balance sheet. Clear? Is complete all of you? Okay. So now we shall move on to the preparation of a balance sheet. The second part of financial statement after completion of a trading and profit and loss account is a balance sheet. So balance sheet as at 31st March 2011. Since the date is given when the year ends is on 31st March 2011. So we have to open the balance sheet and we have to draw the format. So the left part is liabilities and capital, right part is assets. Liabilities and capital, amount, assets and amount. So now we shall begin with the liabilities side. So first we have to write a capital. So go to the trial balance, the capital amount is given. The capital amount is equivalent to 60,000 rupees. Write as 60,000 rupees here. Next, so in the profit and loss account, we have got the net profit of rupees 14,000. This 14,000 rupees should be added to the capital account. Add net profit rupees 14,000. So now you make the total of capital plus net profit 60,000 plus 14,000 is equals to 74,000. You write this amount in the inner column itself, because one more adjustment is there for the capital. Now, so go to the trial balance. One item is there, that is called drawings. So drawings is an amount that should be deductible from the capital, because I have already explained to you that the drawing reduces the capital or decreases the capital. Therefore, we have to subtract the drawing from the capital amount. So capital is now 74,000 rupees less drawings. So drawing amount is equivalent to 2,700. So 2,700 should be subtracted from 74,000. So now make a, so 2,700 should be subtracted from 74,000, is the resultant figure is 71,300, right? 71,300 in the final amount column. Okay, now you find liabilities. Are there any long-term liabilities? There are no long-term liabilities. So write the current liabilities are available. Creditors. So creditors worth is equivalent to 1,400. So finding is 1,400. You write in the left side after the capital. Next, bills payable. So bills payable amount is 2,800 rupees. So write 2,800 rupees. Now go to the trial balance, and which are the items not recorded so far, you find them. The first one, machinery. Machinery is not yet recorded anywhere, and it is available in the debit side of a trial balance. So since all the assets shows the debit balance and all the expenses shows the debit balance, so now the machinery is showing a debit balance, and it is a fixed asset and it is a tangible asset. So first you write machinery. So rupees 27,000. Next, sundry debtors. All the fixed assets are over. Sundry debtors, it is a current assets. Record sundry debtors 21,600. Next, bank. So bank means cash with the bank, or money with the bank, or deposits with the bank. So our money is there in the bank. As long as our money is in the bank, so that becomes the part of assets. So therefore bank, that means cash at bank. So rupees 4,500 you record. Next, the closing stock. So just few minutes back I have told you that one of the adjustment to closing stock will appear in the trading and profit and loss account, and even in the balance sheet also. In the financial statement part 2, you people will comes to know how to make an adjustment for different items. Which all the items will appear as adjustment in the trial balance, they will find a place in two accounts, one in a trading and profit and loss account and another one in a balance sheet. So as a rule, now the closing stock was given in the problem after the trial balance. So therefore the closing stock first recorded in a trading account in the credit side, and now so we are recording a closing stock as an asset in the balance sheet, rupees 22,400. Now you make the total of both the side. The asset side total is equivalent to 75,500, and liabilities and capital side total is also equivalent to 75,500. Now you can observe whether we have fulfilled the accounting equation. The accounting equation, as I said already, A is equals to L plus C. So A stands for asset side of the balance sheet, and L plus C stands for the liabilities and capital side of the balance sheet. A's side total is equals to 75,500 in the balance sheet, and now L plus C's total is equals to 75,500 together. So now 75,500 is equivalent to 75,500. So that means we have fulfilled the accounting equation. So A is equals to L plus C. I hope you understood. Okay, so next we shall solve few more problems. Dear students, already we have solved one very simple problem on the preparation of a trading and profit and loss account. That means the preparation of a financial statement without adjustments. So now let us solve one more problem on preparation of a trading and profit and loss account and balance sheet. So now all of you go to the practice question, the question number 15, page number 371. So just I will go through the problem, just I will read out the problem, all of you observe it. Prepare trading and profit and loss account of Mrs. Sports Equipments for the year ended 31st March 2011 and balance sheet as on that date. Here in this problem, the trial balance is given as usual and the closing stock is given outside the trial balance. The first item, opening stock 50,000 rupees, purchases and sales both together given in a one line. So debit balance is purchases and the credit balance is sales. Purchases rupees 3,50,000, sales rupees 4,21,000, sales return 5,000 rupees, capital 3 lakh rupees, commission, so it is a credit side, therefore it is a commission received 4,000 rupees, creditors 1 lakh rupees, bank overdraft 28,000 rupees, cash in hand rupees 32,000, furniture rupees 1,28,000, debtors 1,40,000, plants rupees 60,000, carriage on purchases rupees 12,000, wages rupees 8,000, rent rupees 15,000, bad debts rupees 7,000, drawings rupees 24,000, stationery is rupees 6,000, travelling expenses rupees 2,000, insurance rupees 7,000, discount, so discount is given in the debit column, so therefore it is a discount allowed rupees 5,000 rupees, office expenses rupees 2,000 rupees. Outside the trial balance, the closing stock as on 31st March 2011 rupees 2,500 is given. Okay, now so let us solve the problem. I feel that you have already learnt and noticed some of the items at least where to record either in the trading and profit and loss account or in the balance sheet. So on that assumption, so I will proceed to solving this problem. Okay, now so first you have to open the ledger account, so in a horizontal format, so the left side particulars, right side also particulars, and two amount column both the side. On the top of that you have to write trading and profit and loss account of Mrs. Sports Equipments as on 31st March 2011. So here on the topmost corner of the left side you have to write a DR. DR stands for a debit, and topmost corner in the right side you have to write a CR. CR stands for a credit. So as usual we have to begin with the debit side of a trading account. So debit side of the trading and profit and loss account, the first item is opening stock. So opening stock is given in the problem rupees 50,000. So all of you have to record in the debit side rupees 50,000. Next you have to find the item purchases. So purchases is given here, the purchases amount is rupees 3,50,000. Since there is no return on purchases, you have to write directly the rupees 3,50,000 in the amount column. Next you have to find out any direct expenses. Here direct expenses are carriage on purchases and wages. So now first you write carriages on purchases. Carriage on purchases rupees 12,000 you record in the debit side as a direct expenses. Next wages. Wages is also direct expenses. So you write wages rupees 8,000. Then you come to the credit side. So in the credit side first you have to record sales. So sales amount is given, sales amount of 4,21,000, and the return is given, so therefore don't write the sales amount directly in the final column. So first you write in the inner column, so 4,21,000 rupees less sales return is given in the debit column, rupees 5,000. Subtract rupees 5,000 from 4,21,000. 4,21,000 minus 5,000 is equals to 4,16,000 rupees. You record 4,16,000 rupees in the final amount column. Then as usual you have to record the closing stock. So closing stock will appear in the credit side of a trading account after the sales, right? Closing stock rupees 2,500. Now you have to balance the trading account. So while balancing the trading account, what we should do is we have to glance, or we have to make a total roughly both the side, and first we have to make it sure that which side is a more, whether the debit side of a trading account or credit side of a trading account, which side is a more, that amount should be recorded both the side parallelly. So parallelly we have to record, and in this problem debit side is more rupees 4,20,000 rupees, and you write same 4,20,000 rupees credit side also. But in the previous problem the trading account shown credit side more amount, therefore we had got so gross profit in the previous problem. But now in this problem debit side is more, so therefore the difference in the sense the balance comes in the credit side. So credit side means gross loss, so gross loss carry down, so gross loss is rupees 1,500. So these are all the two different problems, these are all the two different situations. In the earlier case we had found or we had got the gross profit, but now in this problem we got a gross loss rupees 1,500. So now we have to proceed for the other part of trading and profit and loss account. So now we have to brought down the gross loss from trading account to profit and loss account. So gross loss brought down rupees 1,500. This amount is already available in the trading account. There is no need of searching in a trial balance. 1,500 rupees you write gross loss brought down. Next, what is our duty is we have to find out which are all the indirect expenses and indirect incomes given in the trial balance. So first you go to debit side. Debit side is meant for recording all indirect expenses. Now find one by one which are all the indirect expenses. The first indirect expenses which is given is here rent, right? Rupees 15,000. So 15,000 rupees of rent paid by the business. So write 15,000 rupees. Next, bad debts. So bad debts is a new item for you. Bad debts means so the debts which is irrecoverable, the debts which cannot be recovered from the customers. So that is called as bad debts, or the debts which cannot be recovered from the debtors is called as bad debts. The debtors creates when only if we sold the goods to the customers on a credit basis, then the debtors will be created. If the debtors fails to repay our amount, that amount will be treated as bad debts. So therefore write bad debts 50 is 7,000 rupees. So bad debts amount is rupees 7,000. Next, stationery. So stationery means it is a very small expenses, so it is treated as indirect expenses. You write stationery rupees 6,000. Traveling expenses. So traveling expenses rupees 2,000. It is indirect expenses. You have to record it in debit side of profit and loss account. Insurance. Insurance is nothing but the insurance premium paid by the business organization, either for a fire or either for any assets. So insurance rupees 7,000. Next, discount. So discount, since the discount is shown a debit balance in this problem, so that is treated as a discount allowed. So right now discount or discount allowed rupees 5,000 rupees in the debit side. Then office expenses. Office expenses is also indirect expenses. It is not related to the production of goods, but it is related to maintenance of the business. Therefore office expenses is the indirect expenses. Record it in the debit side. Now come to the credit side. So in the credit side of this profit and loss account, we have one income, indirect income. So that is commission received. So therefore now you record it in the credit side of profit and loss account, commission received. Commission received amount is rupees 4,000. You record of 4,000 rupees. So now all the indirect expenses and indirect incomes are over. Now what you should do is, so repeatedly we have been doing it. So now you balance the account. So which account you have to balance now? You have to balance only the profit and loss account part, but not the trading account part, because we have already balanced the trading account and we found out the gross loss. Now our duty is to ascertain whether the business has earned the net profit or sustained the net loss. So now, so once again you check by making the total roughly. So the total of debit side is more once again, since the business has sustained the loss. Once again the debit side is more. The total of the debit side is rupees 45,500, and the same amount you write it in the credit side also, that is rupees 45,500 parallelly. And now you make the difference. That difference will be net loss, and that net loss should be transferred to capital account of the business. Therefore now the net loss is equivalent to 41,500. And there is a one very simple technique to balance the account. The total is 45,500 and the available amount on the credit side of the profit and loss account is 4,000. Now, so you see the last digit is 0, and here also last digit is 0. You put the 0. Here last digit, second digit is 0, and here also second digit is 0. You put the 0. Here the third digit is 5, and here the third digit is 0. So we need to get the 5. So to get a 5, so we have to add 5 for this 0. So put a 5. Then next, so here 4 is there, and here it is a 5 is there. In order to get a 5, we have to add a 1 for this 4. Then you put a 1 here. So next, here 0 is there, and here 4 is there. So in order to get a 4, we have to add 4 to the 0. If you add a 4 to the 0, it will become a 4. So now, so 4 is available. So the net loss is 41,500. I hope you understood. Okay, now what you do is, so you shift to the preparation of a balance sheet. So how to prepare the balance sheet? Once again the same process. You have to draw the format of a balance sheet. The balance sheet comprises of the two sides. One is a left side and another one is a right side. So we don't use here debit and credit. Instead of that, we use left and right, or we use the liabilities and capital side and assets side. Okay, so now the title you write balance sheet of Wizards Sports Equipment as at. We prepare the trading and profit and loss account as on that date, but so the balance sheet will be prepared as at, so 31st March 2011. That particular day only we prepare the balance sheet. So now come to the liability side. The liability side first, so since we are following the permanence basis of recording the assets and liabilities, so first we have to record the capital. So it is given in the trial balance, the capital amount is equivalent to 3 lakh rupees. Since the capital has got adjustments or the capital need to be adjusted, therefore the capital amount should be recorded in the inner column or in the detail column itself. You record, don't record at a first instance in the final amount column. So capital amount is equivalent to 3 lakh rupees. Now in a profit and loss account, the business has sustained the net loss of worth rupees 41,500. So if the business sustained a loss, how to adjust, what we should do in the balance sheet, that is a question. So very simple, how in the previous problem we added a net profit to the capital in a balance sheet, in the same way in a balance sheet from the capital account we have to subtract net loss. Here capital 3 lakh rupees less net loss. So net loss worth rupees 41,500. So now you subtract 41,500, we will get so 2,58,500 as the remainder. So 2,58,500 as the remainder. So now one more item is there for adjusting the capital account, that is drawing. So drawing is available in the trial balance itself. So drawing, as I said earlier, so drawing reduces the capital or decreases the capital. So because the proprietor withdraws the amount from the business capital for his or her personal use. So therefore what we should do is we have to subtract the drawing from capital amount. So now the available capital is, after adjusting the net loss, available capital is 2,58,500. So less drawings. Drawings is equivalent to rupees 24,000. From available capital, if we subtract the drawing, the remainder will be 2,34,500. That should be recorded in the final amount column. Since there are no items or there are no adjustment left for the capital, we need to record it in the final amount column, 2,34,500. Next, we have to record any liabilities. It may be the long term liabilities or it may be the current liabilities. Since there are no long term liabilities in this problem, so we have to take up the current liabilities. In the current liabilities, the first one is creditors. Creditors is given rupees 1 lakh, that should be recorded here. So creditors rupees 1 lakh. The next current liabilities is a bank overdraft. Bank overdraft amount is equivalent to 28,000 rupees. So if the cash is there in the bank in your account, that seems to be, or that is considered as a asset. If you withdraw the amount over and above your available balance from the account, so that will be treated as a bank overdraft, and that bank overdraft is a current liability unless and until you repay that amount to the bank. So that is bank overdraft. Bank overdraft is also a current liability. Now we shall move on to the asset side. Since all the items to be recorded in the liabilities and capital side are over, so we have to move on to the asset side. In the asset side, so we have to record the most fixed nature of assets in the first. So first one is plants. So plants means it is an industrial estate or it is a business estate, we can say that. So plants worth rupees 60,000, we have to record it in the amount column since there are no adjustment for this. Next, furniture. So furniture is also treated as one of the fixed assets. So amount is equivalent to 1,28,000 rupees. That should be recorded in the asset side of a balance sheet. The next item is debtors. So debtors is a part of current assets. Debtor is one of the item of current assets. So you have to record debtors. Debtors worth rupees 1,40,000 should be recorded in the asset side of a balance sheet. Next, cash in hand. So cash in hand is a most liquid assets and it is a current assets too. So that should be recorded. So 32,000 rupees in the asset side. At last, the closing stock. The closing stock was given in the trial balance itself. In the sense, outside the trial balance, the closing stock was given. So closing stock need to be adjusted twice, once in a trading account and once in a balance sheet. So I have already recorded closing stock in the trading account in credit side of a trading account. So now we should show the closing stock in asset side of the balance sheet. So closing stock worth is equivalent to 2,500 rupees. Now we have to balance the balance sheet also. That means we have to make the total of both the side of the balance sheet also. If you make the total of balance sheet, so it results to the total of 3,62,500. 3,62,500. As I have explained to you in the previous problem itself, the very purpose of preparing the balance sheet and the very purpose of preparing a profit and loss account is to present or to access the true and fair financial performance of the business by preparing trading and profit and loss account, and true and fair view of the business financial position of the business by preparing a balance sheet, and it fulfills the accounting equation A is equals to L plus C. So asset side 3,62,500, and the combination of liabilities and capital side is also 3,62,500.